To our next segment, Navigating a New Market. It will be moderated by Michael Gulo, Vice President, Policy Business, Council of Canada. And the participants will be Roman Vashuk, Business Ombudsman of Ukraine, Leah Gilbert Morris, VP, Public Affairs and International Relations, EDC, Artem Shivalev, European Bank for Reconstruction and Development, Elena Voloshina, International Finance Corporation, Andrew T. Price, Senior VP of General Counsel, World Council of Credit Unions, Brian Kelsall, Partner, Fasken, Mark Rathbone, Partner, PwC, Lead Relationship Partner for World Bank.
Great, thank you for the introduction. It's a pleasure and a privilege to be here and host this session. I was amazed over the balance of the day in terms of the scope and scale of not only the infrastructure deficit challenge, but the real grounding in terms of the rebuild that needs to occur. And I was able to jot down a few stats that really hit home to me to kind of really illustrate that scale. And so some of the things I heard was right now the country is experiencing a 40% loss of its economic output. Nearly 40% of the infrastructure in the country has been damaged over the balance of the war. 50% of the country is experiencing blackouts. And we had an estimated infrastructure deficit that as of June was around $375 billion and is trending now towards $1 trillion. And so for me, those metrics really stuck out in terms of understanding what the challenges at scale and the significance of being able to rebuild in short order. And so this is a really interesting panel because we've got a number of different experts with decades of experience who are part of international organizations, financial institutions, multilateral organizations tasked with helping with this rebuild. And they've got a lot of different perspective and experience to share and can provide us with an overview of the programs and the services that their various organizations are responsible for delivering. And the principal thematic that we want to explore over the balance of this discussion is really how to start unlocking greater levels of investment at a time of market uncertainty and an incredible level of risk. And so we'll be getting into that over the balance of the discussion. What I'd like to propose that we do in short order is just a quick round of introductions. So who you are, we've got the names on record, but maybe just a little bit about your role within the organization. And then Roman, I'd like to turn it over to you, given your role in terms of an ombudsman and kind of hear you out in terms of where you think things are at and help calibrate the discussion for the balance of the panel. And then I'd like to return to each of the panelists, whether virtually or here in person, to provide a bit more of an overview of your organizations and the products and services you have. And then we'll open it up for some of the Q&As that we can get into. So why don't we start with a quick round of introductions and who you are and what your role is within your organization. Andy, you're on the screen. Why don't we start with you first?
It's a real honor to be here and appreciate all the support for Ukraine. I'm Andy Price. I'm Senior VP of Advocacy and General Counsel for the World Council of Credit Unions. We represent credit unions around the world in 118 different countries, representing about 87,000 credit unions around the world. More importantly for this discussion, World Council is also a development agency. We have a USAID-funded project currently ongoing in Ukraine called the Credit for Agricultural Producers, focus on agricultural lending. We also focus on consumer lending and SME, small business lending as well.
Great, thank you, Andy. Yeah, why don't we go over to you?
Sure. Hi, everybody. I think that the title of this panel is Tools and Support Key Agencies and Institutions. So I'm proudly representing one of the agencies that is part of the official Team Canada that is currently working to support Ukraine and obviously here to understand how we can continue to do so through the rebuilding process, and that is Export Development Canada, EDC. I am the Vice President of Public Affairs and International Relations.
Thank you. Mark.
Hi, good afternoon, everyone. I'm Mark Rathbone. I'm PwC's infrastructure advisory leader here in Ontario. We help public sector and private sector clients finance, procure, and develop large infrastructure projects. I also look after our relationship globally with the World Bank, and therefore do a lot of work with World Bank, IFC, and MEGA around project delivery in the emerging markets around the world, and have done so in places like Sri Lanka, Myanmar, generally countries where you've had significant underinvestment or are working in countries that need to recover from underinvestment or disasters or some form of a challenge to really develop and grow the infrastructure stock in a country.
Right.
I'm Brian Kelsall. I'm a partner at Fasken and one of the global leaders of our infrastructure and P3 group. Obviously what we do is represent federal government, Ontario government, and many private sector players in the development of infrastructure across Canada and in the United States and across the world. We've also done a lot of work in Eastern Europe, and including the Ukraine, which I'll tell you about later. But that's Fasken.
Great. Elena.
Good afternoon, everyone. My name is Elena Voloshina. I'm Ukrainian, and I work for IFC in Ukraine. My job is I'm Senior Country Officer for IFC in Ukraine. I've been in this job for over 25 years. So whatever IFC has ever done in my country, good or bad, I take either some credit for or some responsibility for.
Very good. One thing I should note is that Artem Shevelev from the European Bank for Reconstruction and Development will likely join this call at some point. So if we see a third face on the screen, we'll welcome Artem at that time. But Romain, I thought I would turn it over to you, given that you've been in a new role over the last couple of years, and you've seen a lot of change, by the current government to kind of future-proof or secure international investments. Maybe you could just give us a bit of a perspective from your end of where things are at and where they could go in terms of an international investment component into the rebuild in the Ukraine.
Unmuting will be a good start. Okay, I'm currently business ombudsman, as you've mentioned. Before that, I was ambassador of Canada to Ukraine, so I've had various perspectives on what's going on. The first advice I'd like to give you is forget your smart alecky Facebook friends in thinking about Ukraine, and also don't obsess with non-stop disaster reporting from the media. My advice is engage with the real economy. And Ukraine does have a real economy. So I'll just also then accentuate that with a bit of a kindergarten statement, which is Ukraine is big. In European terms, it's the biggest country in Europe. That means that many things, very different things, can happen there at the same time. It's also diverse, which is a bit more sophisticated than big. But again, means that you can have areas where Ukraine is actually far in advance of some of its neighboring countries to the west and even of Canada, and others where there are huge gaps. I would commend to folks things like checking out the Ukrainian version of Forbes, which takes a company-centric approach to things and tells the story. I mean, you'll find in the current issue that there's profiles of 209 business people who have gone to war, but also 30 companies that have not only survived, but in many cases thrived in the past 9 months. Companies that have grown by 50%, 70%, 200% in these extremely challenging and difficult conditions. So I think you need to have a very differentiated view. Obviously, some of the big picture stuff, huge infrastructure devastation, therefore infrastructure gaps occur. But in amid that infrastructure, which today is particularly hard hit, is a country that is highly digitized. So for example, Ukrainians losing internet doesn't just mean they lose access to their own social media. It means all of their banking is affected, but their banking is extremely digital. I mean, I've talked to, met with, for example, Polish bank CEOs who've been told nobody's actually waiting for you guys in Ukraine because they're way in advance of where Poland is in terms of providing online services to customers. So I think you need to think of Ukraine as a partnering opportunity, not as a patronizing opportunity. It is a place where there exists in many niches high levels of capacity. And very many Western organizations, especially on the aid side, but not only, are, when it comes to helping countries or moving into countries, are used to coming in and talking about local ownership, but actually running everything themselves. And having protocols that require local partners to have a 3-year track record and MOUs and annual reports. In Ukraine, business people, talented people, have set up organizations in the past 5-6 months, and they don't fit within the parameters of UN organizations, major Western international NGOs, etc. I would say take a page out of the book of World Central Kitchen. I mean, you've probably seen them. They've been very much in the media, but it's been a very flexible organization that, in effect, has plugged into the Ukrainian private sector to be able to feed Ukraine. They plugged into Ukraine's biggest restaurant chains instead of looking for individual cooks somewhere to help feed people and help keep them afloat, and delivered nearly $400 million worth of food to Ukrainians quickly and effectively. So I would say, think entrepreneurially, as would be your nature, as opposed to charitably, and think about and identify what are the Ukrainian corporate success stories that you would like to plug into, partner with, and help their success, which is now also going to be global success. And my last point, which is that for those Ukrainian companies that have survived and thrived, they have had to go global. They've had to establish presence in other countries to reassure clients. So, you know, you've had, for example, Ukrainian IT companies open offices in Mexico to reassure North American clients, even though possibly it's more dangerous on the street in Mexico than it is in the average Ukrainian city, even under bombardment. But nonetheless, Ukrainian business has also reacted by going global. So you too can go in and partner not only within Ukraine, but with talented Ukrainians, with technologies, with new approaches to business in taking on the world.
That's great advice, Roman. Thank you for that. Why don't we do a bit of a roundtable then in terms of allowing each of you an opportunity to talk about your organizations in some of the programs and services that you offer. You know, we are here to kind of build capacity and educate the room and hopefully identify some immediate opportunities for collaboration. So, can I start with you, Linda?
Absolutely. As most of you in this room probably know that IFC is responsible for the private sector within the World Bank Group. And the private sector is precisely the part of Ukrainian economy that is not receiving as much support as the public sector does today. Most of the support that Ukraine is getting is going towards the military, towards humanitarian, and towards maintaining the macroeconomic stability. And this is extremely important, and we're very grateful for that support. But the private sector also needs support. And an institution like IFC, we've been trying to support our existing clients, even during the war. We provided them with working capital, which is quite unusual for IFC, because IFC, being a AAA institution, we really don't invest in a war-affected country. In the case of Ukraine, we did. We provided working capital to our existing clients for critical imports and for production of food. We've also reallocated some of the donor funding that we were implementing, some donor-funded programs in Ukraine. So some of the donor funding was reallocated towards more pressing needs. Some of the funding from the Energy Efficiency Fund went towards refurbishing municipal buildings to provide housing for IDPs in Western Ukraine. And last but not least, we continued with our trade facilitation program for the amount of $30 million. But we're also thinking ahead. What are we going to do next? We're going to the board with a $2 billion program where IFC is going to put $1 billion of our own money, and we're hoping to mobilize a matching amount from the donor community to be able to support Ukraine's private sector. The approach will be phased. During the first phase, while the war is still in a hot conflict part, we will likely be providing some short-term liquidity, expanding trade facilitation program, and doing a lot of advisory work, continuing with the advisory work that we have ongoing in Ukraine. During the second phase, most of our efforts are going to be targeted towards rebuilding infrastructure, rebuilding agribusiness as a key sector for Ukrainian economy, and helping the banking sector that would also need attention and help. Banking sector would need capitalization and also dealing with non-performing loans. So this is the thinking where we're going. And last but not least, we're going to get very closely involved with the government with our continued efforts on how to bring the private sector through a PPP model. IFC was one of the advisors to the government of Ukraine in structuring first 2 port concessions and also in putting together the legislation on concessions. We have a PPP unit in the government that is financed by IFC. We will be continuing that effort because we understand that we need to provide all sorts of venues for the private sector to be able to come, and PPP is one of the good instruments of bringing the private sector in.
Thanks for that overview. Andy, why don't I go to the screen and maybe you could tell us a bit more about what's happening in the credit union space.
Yeah, absolutely. Thank you. So our project that focuses on agricultural lenders has been ongoing in the Ukraine since well before the crisis, probably 5-6 years before the conflict started, and we had been working with the regulatory framework to strengthen the credit union sector so that it can serve its members. Credit unions are member-owned, not-for-profit organizations. We're community-based organizations. We don't have shareholders to pay out, so earnings stay invested in the local communities. And when the crisis started, that's been really key. We're in a lot of areas where there are no banks currently lending, a lot of the agricultural areas, and we're making loans of the size that are useful to that particular demographic. The good news is I can tell you is that even as the conflict has started, our credit unions have still been lending. We helped a lot of credit unions during planting season to get their plants planted, financing agricultural equipment, whatnot, and we're continuing to work on that. One of the things we've been focusing on is digitization, getting a lot of our credit unions, put into cloud services and whatnot, so that it doesn't matter if your physical branch gets, destroyed somehow. You have that data wherever you go. You can access it and still run your credit union and still make loans. We have methodologies that we've developed all over the world, really responding to disasters to help with that. So stabilization of our sector right now is kind of our focus. Revising the regulations, I call it, make it a little bit simpler, easier to run during this hard time, but with the focus on keeping the credit union supporting the real economy, which is still out there and still going. We are looking forward to working on the rebuilding and restructuring, with a lot of that focused on digitalization, focus on the credit unions that still have capacity. Liquidity, I agree, is going to be an issue. We've had the martial law, and so the issue of non-performing loans flowing through, that's, I think, a shock that's still going to come through not only credit unions, but the banking sector as well. That's going to have to be dealt with, at least in the short term. then hopefully come out with a infrastructure that will allow credit unions and the banking sector, frankly, to serve that real economy in a safe and sound manner. That I think there's challenges with that. The EU is looking to join the EU, and as part of some of the earlier agreements before have agreed to kind of comply with EU banking standards. I think that's the good thing, will help strengthen the sector overall. So we've been working with the National Bank of Ukraine on what that looks like for credit unions as well. So it's a lot of challenges. I love the screen that you have on behind. I can't see it right now, but it says this is a brick that will rebuild. Kind of one brick at a time. You focus on those local people, their local needs. I mean, that's the way we're gonna get back into this one brick at a time. And so I focusing on those local communities. From my view, from a credit union perspective, we're smaller than the banking sector. I mean, I think that's the way to do it.
Thanks, Andy. Very helpful to get that grassroots perspective. Leah, maybe you can tell us a bit more about the programs and services available to Canadian companies and some of the things that are offered through EDC.
Absolutely. So EDC is Canada's official export credit agency. We are a commercially oriented financial crown corporation owned by the Government of Canada, and we report in under the Minister of International Trade. For our Ukrainian delegates in the room, to draw a parallel, we are equivalent to the budding organization back in Ukraine called ECA Ukraine. As our official export credit agency here in Canada, we are mandated to support Canadian trade, all sizes of Canadian businesses in growing their international business, in seizing international trade opportunities. Our long-term problem that we're trying to solve is one of a broader Canadian problem, and that is to help Canada regain its standing as a leader of international trade, as we've lost some ground there over the last several years. If I was to really wrap that up simply, and hopefully powerfully, EDC exists to make Canada and the world a better place through trade. I'll say it again. EDC exists to make Canada and the world a better place through trade. That's a pretty powerful mandate to be sitting behind in this room in the context of these discussions. Ever since the outbreak of war in Ukraine, the Canadian government has been working hard to be there to support the government and people of Ukraine, and EDC has been part of that team. How we do this in a day-to-day capacity is through our financial insurance and knowledge product toolkit. So for example, we offer short-term credit insurance to help de-risk transactions. So if a Canadian company is looking to de-risk the risks associated with non-payment, buyer bankruptcy, contract cancellation, we have products that can help with that de-risking. We also have a financial toolkit. We can offer buyer financing for foreign buyers. We can offer direct financing. We have longer-term structured and project finance solutions. We have a suite of solutions that bring working capital to Canadian businesses that help them grow their business here, access supply chains, and develop those trade opportunities. Obviously, all of this linked to trade. And we have an investment program and knowledge advisory program. So on the last point, this is a bit of a differentiator for EDC. We do have the ability to draw on a very broad network and capture a lot of intelligence and knowledge and know-how and work with our partners. And we try to bring all of that and translate it for the benefit of Canadian companies who are sitting there with questions about, how do I access this market? What's in the toolkit in terms of helping me go abroad? I'd like to diversify out of the US, for example, and maybe go into Europe. What do I need to start thinking about? And EDC can play a role in that strategic thought process that Canadian businesses go through. We have remained and we are open for business in relation to Ukraine. Obviously, given the context that we've talked about here today, a lot of demand has gone down. But we do see demand, especially on the short-term insurance side, in particular in relation, obviously, given the synergies of our economies together in the agri-food sectors and lesser ICT, or information and communications technology, and mining. If I can have one more minute.
One more, sure.
The other piece we do as an ECA is we leverage our convening power as an agency of the Government of Canada. And what I mean by that is we work internationally with a very broad peer group of export credit agencies around the world. In fact, this year, we've been chairing the G7 heads of ECAs. We had them here in Toronto about 3 weeks ago. And Ukraine is one of the biggest topics of that conversation. So much so that the CEO of EDC challenged her peers in the G7 ECAs to go back home, to do some blue sky thinking, to stretch our imaginations as ECAs bound to our trade lanes, and to come back in the middle of December for a very meaningful conversation around how do we start to partner together? How do we start to share risk together in transactions? How do we start to stretch what can be in terms of an ECA's offering to really start to think forward in terms of Ukraine rebuild?
Really helpful. Thank you for that. Mark, what about from your perspective, both as a PwC staffer and as well as someone that's on an advisory capacity at the World Bank?
Yeah.
Some of the programs and services that you're seeing.
Right. So firstly, let me start by saying that PwC, through its 11,000 people in Central and Eastern Europe and the 1,000 people we have in Ukraine in our 3 offices, are already supporting the Ukraine recovery efforts. We're doing that in 2 ways. On the one hand, we have a very big philanthropic drive around PwC Foundation, where we're housing displaced people, we're raising money, and we're contributing that money back into Ukrainian families. The second part is through supporting the Ukraine government in terms of its investment programs. So Ukraine Invest, for example, is working with PwC, or PwC is working with them, in developing foreign direct investment policies, trying to attract investment from the private sector, which is very important, and I agree with Elena there, into the Ukraine. Stepping back from that, there's 2 broad areas where PwC is very active in this type of scenario. Firstly, on the ground, helping government and the IFIs deliver big infrastructure programs, deliver policy, create new regulatory and legal frameworks, and helping deliver a rebuild program that goes all the way through from pipeline development and prioritization all the way through to execution, which is very important. The second part, which is the other side of the coin and equally, if not more important, is really supporting the private sector in understanding where they can invest and how they can invest. And that can be everything from tax and accounting advice through to market entry strategies, partnering arrangements, fundraising, facilitating discussions with IFIs and others to try and ensure that investments that are going into a country as it's recovering from a war are effective and efficient. Of course, the final part of the jigsaw, which is one of the reasons why I think I was asked to come and sit in this panel as the global client partner for World Bank, is the support we give to the IFIs globally. For me, of course, World Bank is very important, but you've got EBRD, EIB, and the rest, all of which form a very critical part of the long-term restructuring and rebuilding of the Ukrainian economy.
That's excellent. Thank you for that. Brian, you from the Fasken side?
Yeah. So Faskens is a global firm that's Canadian-based. I think for this discussion, what's really relevant, you know what law firms do, but is our expertise in infrastructure. There's 3 things I'll mention. One is our expertise in infrastructure, and in particular in P3s. I think it's fair to say we're one of the leading firms in North America in that area, not to brag, but we are the only Canadian firm to have won the P3 North American Law Firm of the Year infrastructure twice in the last 5 years. So we'll talk more about that later, but that's the qualification. The second is that you know, the firm is born of mining and infrastructure. It's had a long tradition of going offshore. We're a firm of 700-800 people, but about 100 of those are offshore. And we followed our clients for years. We're the only team that's been on the IFC panel, legal, and DBRT panel that's Canadian. And we've done many, many transactions in Eastern Europe and the Ukraine. So it's an area of deep interest and I think expertise for us. And the third thing is that, again, as a law firm, we have an impressive array of clients. Some of whom we invited here today, some of whom came, some of whom didn't. There's a lot of pent-up interest in the Ukraine for a lot of reasons. And they're looking for reasons to come, and they're looking for the certainty that they need to come. And that's one of the reasons that we're here today, is to join that conversation and help facilitate that. So that's the Fasken story.
That's great. I'd like to pick up where you left off. You know, that idea around certainty, addressing risk, overcoming risk, and as a result, kind of creating the conditions that, you know, translate into business confidence and ultimately translate into investment opportunities coming on sooner rather than later. I'm wondering if we can kind of drill down on that a bit. And Mark, maybe I'll start with you, given you know, your global experience. You've done a lot of different work in many different countries, and probably have some perspective to share on confidence, security, some of the conditions for success that can really, you know, make some strides here and start unlocking investments sooner, ideally, rather than later. So over to you. Why don't you start us off?
So I think firstly, what has been extremely humbling today is to hear stories of the resilience and courage of the Ukrainian people and the government. And I think as a starting point, that forms the backbone or basis or platform of the future rebuild program for Ukraine. So if you're talking about a rebuild program as you come out of a heavy conflict period and war, there are a few things that are really important. One is the continued strengthening of the institutions within the public sector, to ensure that you have transparency, to ensure that you have strong regulatory and legal frameworks, and you create and facilitate an environment in which investment can occur. The second, and I've mentioned this already, is the role that the IFIs play. IFIs being international financial institutions who will be critical to facilitating the future growth of the Ukrainian infrastructure economy. The third, I would say, is a very clear set of prioritizations around projects that, number one, are focused on critical infrastructure, number two are digital, number three are looking at connectivity across the economy, and then, of course, focusing on things like healthcare and housing, all of which have been heavily impacted through the war. Now, there are a few things that you need in order to facilitate that successful investment. Firstly, a coming together of both public sector and private sector funding. And that will be critical in terms of the scale that's needed over the longer term investment programs. Secondly, I think on the private sector side, there needs to be a degree of empathy around the risk-return imbalance. So Elena mentioned IFC investing in or lending into a war-torn country for the first time. It will be a relatively uncomfortable position for the private sector to be in terms of investing in this economy, but it's something that is very necessary and very important. And of course, with the strong legal and regulatory framework and strong public institutions and the support of the IFIs, hopefully that risk profile can be depressed slightly to facilitate that investment. Over the longer term, I would say for this to be a successful program, there needs to be a real focus on resilience and building for the future. So we talk about sustainability, we talk about green infrastructure, we talk about low carbon economies, but what you do need to do is looking at leapfrogging that infrastructure cycle into new infrastructure that is adaptable for the future, that is highly digitized, that is green and sustainable, and really does focus on projects that boost the economy. I think if you can pull all of those together, which the people in this room can, then you're looking at a very successful program.
Yeah, those are great markers and sound advice. Elena, given your role, anything to add on what Mark said?
I would look at a concrete example. Traditionally, Ukraine has been exporting most of its commodities through the deep water ports. What happened during the war was that these ports were completely blocked, and for quite some time we were not able to export neither grain, nor iron ore, nor metals, nothing. Thanks to the international support again, we were able to get those corridors back, but in a very small capacity. So currently we are exporting about 10 to 15% of what we used to export. Immediately after that, us, as the World Bank, together with the private sector, everyone started looking at alternative ways. And alternative ways was Ukrainian railroads, and there are lots of bottlenecks with Ukrainian railroads that we identified. Not only is there not enough terminals, there's also different size of gauges for the railroad between Europe and Ukraine. But interestingly enough, we found that there were a lot of bottlenecks on the European side as well. Europe was just not prepared to utilize that much load of grain. It was mostly grain. We identified a couple of bottlenecks in Constanza, which was the only other port which was available. The private sector stepped in and started building those additional terminals in Izmail at the south of Ukraine and also at the border with Lithuania and Poland. But what we missed in all of these efforts, while most of our attention was going towards, okay, we need export logistics, what we missed was that actually the result of limited export capabilities, this has a tremendous negative impact on the sector. Because the farmers did not harvest, because they had no storage capacity, because they couldn't export. And so the farmers are not going to plant. So come next year, when we harvest the next season, we're probably going to be able to export not the 50, 60 million tons, which Ukraine was exporting over the last couple of years, but something closer to 10 to 15 or 20. So what needs to happen is some kind of a comprehensive support, which would require efforts from all of us. It would require partnership between the government, IFIs, the private sector. We all need to be racking our brains how to address that challenge. And traditional, an instrument here or an instrument there is not going to do the trick. We need to be coming up with a comprehensive solution. And this is why, we are now trying to build those partnerships and to see what IFC and the World Bank can do in helping the government figure out what needs to be processed in Ukraine, because there is a lot of talk of value-added processing that's going to reduce the volume of what is exported. But the question is, it may make sense in certain cases, but not necessarily. Someone needs to look at it, again, do a thorough study, and this is what we're going to be doing as the World Bank Group. Someone needs to look at the trade flows, because given Ukraine's now a possible and imminent accession to the EU, probably we're going to start exporting more to Europe. But at the same time, we shouldn't be forgetting the people that are starving somewhere in Asia and Africa. So but it needs to be a comprehensive look at the export logistics. So maybe what we need to build is some intermodal logistics complexes with the railroad. So what I'm trying to say with this one example is there needs to be a partnership of the efforts of all of us to be able to come up with a comprehensive, long-term, and sustainable solution.
Vision's important. Maybe for the other panelists, so given that Mark and Elena have kind of give us a good overview of some of the risks and ultimately some of the elements that need to be in place in order to kind of foster that confidence that translates into investments, what type of counsel would you give to Canadian businesses kind of going into this complex space where there's still a level of market uncertainty and risk, but in some cases a moral imperative to do the right thing. In many cases, there's a business argument to be made. So maybe starting with Roman, given that you've been on the ground in a number of different capacities, what advice would you be giving to Canadian companies to get engaged in a market with somewhat that's volatile? I think you're on mute.
I would stay with the advice I was starting to give, which is go identify the robust performers and work with them. I mean, that has been one of the markers of success for the very few risk-tolerant Canadians who have gone in, Fairfax being one of them. If you look, for example, at their investment into the agricultural group Astarta, which is a very well-governed group, they have managed, again, to increase production, increase sales this year. So finding local partners who are robust and helping them grow. Final example, Ukrainian high-tech company manufactures security systems. Wanted to relocate, I was in Poland. I tried to interest the Poles in getting them relocated. The Poles dithered, couldn't put together a package, Turkey did. Within 6 months, these guys had their plant set up in Turkey, and they are now looking to penetrate the North American market because they're growing at 50% a year. So who is ready to partner with a Ukrainian-based high-tech company that has relocated part of its production to Turkey and is eyeing the North American market? Or will we get the usual, and I'm afraid, my experience, Canadian, oh, I'm sorry, there's a Ukraine risk. We love Ukraine, but let's face it, it's business, complexities, risk management profile, oh my God. So I would say find the robust performers and go for it.
Okay, thanks for that, Ruben. Maybe we can go to Brian and then maybe Leah. And then I'd like to turn it over to Artem, who has joined us. Welcome, Artem. Why don't we listen to Brian and Leah first, and then Artem, you could provide us with a bit of an overview of who you are and what you're up to. Brian.
Same question?
Same question. What do you think Canadian companies need to be doing then going into this type of market? What type of counsel?
Well, Canadian companies have been traditionally risk averse. So that's a tough question. There's a tremendous amount of support for the Ukraine, obviously, but you know that's a different thing. And somebody said this morning, put skin in the game. It's not going to be anything other than a partnership where there's mutual benefit. And the trick, to my mind, is to find the certainty and stability in what's being invested in, or the manner that they're investing, so that there's some degree of certainty that there will be a return on investment and skin in the game. I mean, I can speak, if you like, to one of the thoughts I have about the P3 model, which I think could be useful in that regard, if you want to do that now.
Why don't you hold that thought? Yeah. I do want to get to the P3 part.
Fundamentally, I would be saying to people, it won't be me saying it to them, it'll be them saying it to me. They will want to know why it will be true that if they do invest, they'll get their money back, and that it will be a profitable venture and a long-term partnership. And that's a good question. And I think that's part of what this panel is all about, is to try to, that's what Elena's saying. I mean, this is not this is a very broad and million-part question, but that question has to be answered, and answered soon, in order to attract Canadian investment, North American investment, or any investment for that matter. It's a fundamental.
Agreed. Yeah.
So I think my advice starts with an observation that many of the conditions to international trade transactions that were in place prior to the outbreak of war will continue to be in place for international trade transactions. And probably one of the best examples and an obligation in terms of working with EDC is to ensure that international trade transactions subscribe to modern high standards in the environmental, social, and governance space. I would say that we've heard about a lot of the reforms that have long been taking place within Ukraine, and it's excellent to hear that progress. An agency like EDC can help Canadian companies navigate some of those challenges that you'll find in transactions on the ground. And probably my second piece of advice, you know, when I think about how EDC is set up, we have offices across Canada, but we also have offices across the world, and we have representatives in Europe, and they work very closely to understand a particular market. We work very closely with our trade commissioner services teams, the ambassadors' offices in the country, and the wide variety of IFIs and local banks to really understand the specific context of operating within a country, Ukraine in this case. They are powerhouses when it comes to intel in terms of knowledge and insight on how to get business done in a market. I really suppose I would wrap up my advice to say, like, listen to them.
Of course, Elena.
One more advice. When the risks are high, the response is about risk sharing. So we would all be looking for risk sharing, and so would be the investors. Risk sharing with the banks, risk sharing with the ECAs, risk sharing with the IFIs, with the advisors. It's all going to be about partnerships and risk sharing.
Absolutely true. Artem, welcome to the conversation. Maybe you could take a couple of minutes to introduce yourself and explain your role, and then we'll turn to a question about P3s, given that we've got a limited amount of time for this panel. Artem, over to you.
Thank you so much, and I'll try to be very brief. My name is Artem Shevlov. I'm the Ukrainian representative on the board of directors of the European Bank for Reconstruction and Development, which is a major regional IFI, one of the biggest institutional investors in Ukraine, and a partner institution to Elena's IFC. I also sit on the supervisory board of Privat Bank, which is the largest bank in Ukraine, happens to be state-owned, hopefully to be privatized as soon as the war is over. What I do, well, I just came back from Ukraine, from Kiev, just literally less than an hour ago, hence being late. Sorry. Travel takes a bit longer in a country when you're being shelled by the Russians. But the thing that we did this morning was for the EBRD board to approve a major investment into Ukrenergo, the national grid operator in Ukraine, and essentially the guys who do miracles now, keeping the lights on, whilst Russians are knocking out the key power utilities. And I think that transaction in itself is a testament to what's going on and how the world could still be relevant in Ukraine. It's a country at war. It's the asset that is being targeted specifically by the Russians. But at the same time, a major international financial institution like EBRD does find a modus operandi to go in there to provide a 300 million facility. The Dutch colleagues, the government of Netherlands chips in with 72 million euros of a grant finance to support that. So it's this kind of approach. It's the risk sharing from the donors, grant elements to provide further leverage to the IFI funding. And it's just then targeting the critical elements. I mean, in this specific case is the energy infrastructure. Other transactions include financing to the national oil and gas operator, Naftogaz, to purchase critical amounts of natural gas to keep the heating on in the winter season. So these are the facilities that we are focusing now. That is an immediate need. But going forward and probably trying to catch up with the conversation that you just had now, and as Elena just said, look, everything that is a partnership is probably the best route in for any international business, including Canadian businesses. So if there is a transaction which is a public-private sector partnership, which is financed by the international financial institution like EBRD or IFC or the World Bank or the European Investment Bank, it will require a major private sector shoulder. And it's of course an international private sector shoulder. So that is probably the best opportunity for international businesses and Canadian businesses to play a role in the next 6-12 months. It's a different ball game when we get to the reconstruction phase. Again, hopefully within the next 6-12 months and beyond. But I'm sure that we'll have an opportunity to discuss this a bit later.
That's great, Artem. Thank you for that. I think it sets us up well to have a deeper conversation about public-private partnerships, or P3s as we refer to them, over the balance of this conversation, which For those who may not know, are partnerships between governments and the private sector to build public infrastructure like roads, hospitals, schools, or in some cases to deliver services. And in many respects, Canada is regarded as an international P3 leader when we look at the execution of some of our public infrastructure provincially, particularly at a provincial level. And so my question is really how Canadian expertise can be used to advance P3 projects in the Ukraine, and maybe there's some synergies that can be gained by working with international financial institutions. And Brian, I thought I'd start with you, given your experience with P3s, to maybe kick us off and give us your thoughts.
Okay. Well, I think that well, let me go take a step back. We've used the word partnership a lot. We've used the word risk. We've used the word uncertainty and profit and return. What the P3 model is meant to do is marry the private sector and the public sector in a common goal and a risk-sharing methodology that basically sort of allocates risk to the person best able to take it. And if you think of it that way, there's a great deal of flexibility in that model. It's true the Canadians have a very effective and proven model. It was developed over the last 20 years based on the UK model. The Ukraine and Canada are quite similar infrastructurally, if that's a word. They're both big countries. They're both cold countries. Their economies have started really fundamentally based on agriculture and extraction, and with budding, or more than budding, and advanced and very sophisticated IT technology sectors and service sectors. I mean, that is the Ukraine, and it is Canada. And our P3 model has been designed to respond to that and all those challenges. And I think the good thing about it, and where it could help, because a model isn't going to help, where it could help is that it has been exported to many countries, in particular the United States, who have adopted vast chunks of what has been developed here, because it was developed here first. And so there's a large element of private sector investors who are familiar with that. So if I go back to the certainty word and the fundamentals of that, to the extent that the Canadian model could enter the conversation, and I'm looking at Elena because it's your conversation, because IFC has been fundamentally behind developing the P3 structure in the Ukraine. And I guess where I see the Canadians could come in and, we'd love to join that conversation. I think we can add some best practices and some thoughts. Can it be done without the IFIs? No. The risk profiles are far too great and too complicated, and the IFIs and other sources of funding will be needed to mitigate risk and risk share and have baselines and gain shares and pain shares and all kinds of things. But I think what's good about the Canadian side of it, and I know there's a huge interest, is that technology transfer, if you put it that way, can be done very quickly. And that's where I go back to what the Prime Minister said this morning. We need investment and we need speed. And there's no reason that can't start now. It won't solve the problem, but it would certainly, I think, form a catalyst that could be effective to bringing a lot of private sector interest into the Ukraine based on the certainty and the track record of what's been developed here, looking at the synergies and the similarities between the two countries. So I'll throw that out there as a thought for people to chew on.
Yeah, that's terrific. Elaine, anything to react to in terms of the P3 opportunity and the synergies can be with IFIs?
We definitely see a lot of opportunities because Ukraine has demonstrated that the legislation on concession is working. But PPP is not only concessions. There is a variety of structures that could be used, and IFC would be sharing all of these best practices with the government of Ukraine. We are currently financing the PPP unit within the Ministry of Economy. And there was a request by the Prime Minister of Ukraine, Mr. Shmyhal, for IFC to become a strategic advisor for the PPP legislation, as well as structuring PPP transactions in Ukraine. We would certainly benefit partnerships with experienced people from Canada, because we could certainly learn a lot, and something that could be implemented in Ukraine. So we would welcome other people in this room who are interested in developing PPP agenda in Ukraine. Happy to discuss and put them in touch with my team who's working on it. We see opportunities only in ports. So far, it's only been 2 ports that have been concessioned. But there's no reason why PPP structures cannot be applied to healthcare. We were just talking that it's actually how it started in Canada. There's no reason why it cannot be used in energy where it is required, as well as other sectors. So we will be pushing for that agenda and happy to partner with other people with experience.
Excellent. Mark?
Maybe I agree with everything that both Brian and Lena have said. P3s are a fantastic tool for encouraging partnerships between public and private sector, dealing with risk allocation effectively. What I would say is that as the P3 models develop globally, and the Canadian model is also developing through progressive and collaborative contracting structures to try and address some of the current risks around inflation, for example, it's important to try and keep ahead of those trends and use the precedent that's been developed across different countries. And probably the only point that I would add is that P3s are a fantastic tool, but it's not a silver bullet that solves all problems. There are very many different contracting structures that can be applied in different scenarios. And I think when the PPP unit and the Ukrainian government is looking at different models, they need to try and find a model that suits the infrastructure asset that's being procured. And of course, we discussed this earlier about speeding up procurement, and the urgency around this is high. So looking at ways that you can accelerate that P3 procurement process so that it's quicker and easier while remaining transparent and clear is going to be very important.
Very good, thanks for that. I do want to go to the screen and ask some questions to get some more perspective on the P3 opportunity. Andy, I'd like to start with you in terms of the credit union perspective and how P3s fit into your model and where you potentially see opportunities for them to be advanced in the Ukraine.
Well, yeah, I'm fascinated by the conversation and how I'm sitting here thinking through how the PP model can apply in the financial institution sector, because I do think the banking sector and financial institution can play a role, and so how do we structure that in the way? Infrastructure is a little beyond my bailiwick, but a couple things to pick up on, because here at WOCA, we have a lot of experience dealing in conflict areas. Coming out in Rwanda, we helped create credit unions post-genocide there. And we did such a great job, Rabobank bought us out there. We built credit unions in Afghanistan there that were functioning up until, well, the recent situation there. And you know, working in countries where there are legal uncertainties and legal risks is always a challenge and difficult. I have found, even working in Ukraine, you know, I mean, this is more of a practical, y'all are doing a much better job on the high level, intellectual level than I am. What I've found, though, in working in Ukraine is, you know, the best thing was to have just a good local partner there who knows the landscape. That's helped me more mitigate risk situations than anything. They know who's important, who's not, what agencies you need to watch out for, what agencies you don't. You know, tax issues, those kind of things that you can but having that local knowledge to me is always key. There another comment that Mark made that I thought was really insightful that he made early on about we need to advance the regulatory frameworks to make them I can't remember sustainable, resilient, and to focus on digitization. I thought that was a really insightful comment. That's what I see from my experience in helping regulatory frameworks for credit unions around the world. Doing that is often the best way to get the institutions into a position where they can be healthy and effective, and you gain a lot of that certainty in the regulatory frameworks that I think a lot of people who are looking to come from the outside are looking for. That's a key. That's a lot of what we do here at World Council, advising credit union systems on how to get them credit union situation where they can grow and maximize their outreach and focus on their lending. I thought that was an excellent comment that I agree with and that I see with from my perspective. That's probably the best I'm going to give you on PPP because it's a little bit out of my expertise there.
No, that's helpful, Andy. Thank you for that. Artem, I do want to get your perspective on this, given your portfolio and where you sit within the European bank piece, but also within the Ukrainian financial community too. So, your thoughts on P3s and the potential?
Well, P3 is definitely something to look at because essentially it's relatively unexplored sector. Well, relatively in the sense that where the country's economy was before the war. So it's there are very few, if any, meaningful P3s there. So this is definitely something that all the IFIs have been working hard on putting together the legal framework, the institutional framework for that. So it's something to definitely focus on. What I would like probably to kind of bring to discussion is another form of partnership, which is probably could be more interesting in the months to come, particularly immediately after the war, which is privatization. Ukrainian economy is still very heavily dominated by the public sector. From the banking sector, which is still quite heavily in the government's hands because of some bank failures, nationalizations, historical setup, and going into energy, going into many other sectors where the government, the public sector is still dominant. And the government has been very explicit about its desire to change that, to make the economy much more competitive, much more private focused. And again, that basically that's it. So all of these government assets will be privatized. At least I haven't heard anything from the government to suggest that they plan to substantially revise the timeline because of the war. So clearly, you don't sell the assets when the missiles are flying in. But the statement that the government is happy to welcome the private sector investments into the key privatizations as soon as the situation allows it. It's a great signal. And then again, that's the partnership we're talking about, because any privatization will be happening on the back of international financial institutions propping those privatizations up. The government of Ukraine, of course, will be providing all the possible incentives to support these first comers in the privatizations. So yeah, definitely something to look at.
Great, thank you, Artem. Okay, we are up to the 2-minute warning. I've got a yellow light flashing at me here, and so I do want to do some rapid appraisal here with concluding remarks that we could just kind of go around, and any final thought, any final comment that you'd like to make to kind of wrap up the session would be helpful. Yeah, go ahead.
Sure. Maybe I'll put it in the form of a pop quiz. So what did we hear from our Ukrainian colleague this morning who walked us back to a past lecture on quantum physics? We heard that nothing exists in itself. And the point being made that you have to work collaboratively in this environment. EDC works as part of Team Canada with a very diverse range of partners here in Canada that work anywhere from the startup and innovation space to the business development space to work with Canadian partners and foreign entities to try and facilitate flow of trade and business between Canada and Ukraine in this particular stance. All of those agencies are here. EDC is here exactly to help you as you try to weigh up and think through how you take advantages of the opportunities that are out there.
Perfect. Mark?
I think from our perspective, I'd just like to say that the entire PwC Global Network, our 7,500 partners and staff here in Canada, and our 11,000 partners and staff in Central and Eastern Europe stand ready to work with the Ukrainian government, the IFIs, and the private sector partners that we have in this room in really powering up the rebuild of Ukraine. We are very committed to it, and we look forward to working with all of you.
Mark? Ryan?
Well, simply that, I mean, I was impressed with what, I think it was the director of the CEO in Ukraine, CEO organization, listed 5 things that why Ukraine was such a good opportunity to invest in. And one of the things that he sort of struck me was the social capital and how it had struck a nerve through the world. I don't think I've ever seen in my lifetime a scenario where there's been such willingness on the part of everyone to help. It's a lovely feeling. And so all I'd say is that, you know, I think we all in this room stand ready to help and be fun. It's super important to do. So we look forward to any opportunity to do so.
Okay, Brian? Elena?
Even though we're physically now in Vienna, the IFC and the whole of the World Bank Group stands by Ukraine, working very actively in Ukraine. We're very open to new partnerships, including to partnerships with Canadian investors and Canadian partners from developing world and Canadian banks to help Ukraine in its rebuild. Please come, we're waiting for you.
Thank you. We'll go to the screen. Andy?
No, just to say, I'm proud to be part of this community that's putting all these great minds and great resources to addressing what's been a travesty in this world. And so just pleasure to be here, and thank you for everything that everyone is doing.
Then we'll go to Artem, and then final word with Roman.
EBRD has committed 3 billion euros to support Ukraine in 22-23. We've already committed over 1 billion euros this year to specific projects. I mean, all of these money are not simply supporting Ukrainian economy. They are working in partnership both with the Ukrainian economy, but also with international investors and domestic investors still looking to be there. It's not about just helping. It's not a one-way street. This is something about having a big European economy getting further integrated into the region and basically having an effect, a much bigger positive effect to as many lives as possible.
Thank you. Roman? You're on mute again.
Okay, so 2 snappers there. One, Ukraine has a number of belt and braces mechanisms to support investors. Some of the others, like IFC, have been here. But one of them is the agency I run, the Business Ombudsman Council, which accepts complaints and tries to resolve them from both local and international business, from the biggest to the smallest. And secondly, the advisory world, I think post-victory, will be a two-way street, because I think there will be a lineup of people waiting to get advice from Ukrainians on resilience and managing crisis situations.
Okay, thanks. Well, I'll finish where I started and say it's been a privilege to moderate this panel. I knew it would be worth it, and there would be a ton of experience to glean from the conversation. So maybe a round of applause for everyone that's participated virtually or here.